Welcome back. The Dow Jones, Fort Knox. We got some things to talk about today. I'm Eric Sapanik. I'm here with my colleague Todd Graff, and we're gonna have a little bit of a discussion. Welcome to the Gold Spot. So, what a week. Dow Jones. Tell me about it.
Yeah, so everybody's talking about the stock market. It's down about 8% just in the last 3 weeks, just in the last month or so. And I think everybody needs to understand that, hey, what Trump's doing right now with tariffs, everything that he's uncovering with the DOGE and all the government spending, all that stuff, that's going to have effects on Wall Street. That's going to have effects to the stock market. So a lot of people, they like seeing these changes. They like seeing Trump do this stuff, but they want to have their cake and eat it too. Okay, they want to see all this cleaned up and all this corruption exposed, but they also want their 401ks and their stock portfolios to keep going up forever. And I think that there's a disconnect there.
Well, I think that you and I were speaking before this, and we're going to reiterate some of the things that we talked about, and one of which is that the Dow right now, 41,000 points. I mean, it was just a number of years ago, not that long ago, that we never thought 41,000 was even in the foreseeable future, until we went ahead and doubled the money supply in a couple of years. That definitely helped increase that number, wouldn't you say?
Oh, exactly. And that's exactly what it is. The Federal Reserve, the bankers, the government, they've created so much money, so many US dollars, and that money is in the stock market. A lot of them have been doing stock buybacks. They've been pushing their stock values higher and higher. The price is higher, but the profits just aren't there. And a lot of those companies too were relying on government contracts and, unlimited government spending. And that looks like it's coming to an end.
Well, not only that, I mean, you're talking about some major differences now with trying to get out of these wars. I mean, that's going to directly affect massive companies like Boeing, Lockheed, Raytheon. The reason why NATO was so important to try to keep expanding it was to keep feeding those monsters. And now that we've seen a different outlook on our government and the way that we want to approach geopolitical tensions, that's going to make a major difference, and it's going to affect Wall Street, wouldn't you say?
Yeah, and people need to understand too, what's best for Main Street is not always what's best for Wall Street. And I think that's what we're going to find out soon.
Especially when it comes to things like housing prices. If you own 3 homes, yeah, housing going up forever sounds great to you. But if you're a new family that's hoping to secure your first home, well, if you're a family of, let's say, just 3, you got newlyweds with 1 child, and they're looking to buy a home, and hey, guess what? Here's your $600,000 starter home. The next thing that we want to talk about here is a little bit about what's going on with the possibility of looking into Fort Knox.
Oh yeah, definitely. That's a huge topic right now. And you got to remember too, gold almost at its all-time highs right now. Gold's been going up all year. It's
done very well this year.
And it's stable too. It's going up steadily. And with Fort Knox, that could drastically change the supply and demand of gold that we know about. And if there's any discrepancies of what we thought was there, we could see the price jump very quickly when they do audit Fort Knox, which should be, they're talking about doing it probably in the next few weeks or possibly months.
Imagine if they opened that door and there was nothing there.
Yeah, that alone could cause the gold price to spike much higher right off the bat.
I've got bigger concerns about not just if the gold price would spike, but my concerns would come down to what would happen to the vitality of the dollar. Because, I mean, we've been off the gold standard for, since the 1970s. But being off the gold standard there was one big caveat to that, and that was the fact that we had the majority of all the world's gold. And it has ever since the Bretton Woods Act and before. That's the reason why we were reserve currency of the world, was because we had the highest amount of gold holdings, which right now is calculated to be about 8,100 metric tons and change. So if we all of a sudden found out that half of that gold supply, which is in Fort Knox, wasn't there, which I don't believe is likely, But even let's say the audit comes back to find out we only have half of those reserves. I mean, that all of a sudden could throw a ripple through our actual currency.
Right. And there's already a number of problems with the US dollar as it is.
Yep.
If we add that on top of things, yeah, things are going to be, and it looks bad for stocks, it looks bad for the dollar, but gold prices would perform well in that type of environment.
Okay, so we actually have a report that has been around for a while about the Fort Knox and the audit and the lack thereof audit. Todd, can you tell us, our viewers, about how to get a copy of that?
Yeah, absolutely. So there'll be a link at the end of this video. You can click on that and view the report, or give us a call. We'd be happy to talk about this with you as well.
Reach out to us, give us a call, text us, however you want. We'd love to chat. With that being said, have a great weekend, and we'll see you right here again on the Gold Spot.
If you enjoyed today's Gold Spot, like or subscribe to both our YouTube and Rumble channels. Also, comment below if you have any questions or if you'd like to hear us talk about a specific topic in a future video.